The nickel price today is around $13 a pound. We will produce something in the region of 100 million pounds of nickel per annum. So you can quite quickly see the math there is leading to something in the region of $1 billion USD of EBITDA per year, and then a mine life of 35 years. So the economics associated with nickel production here on that very high margin basis are frankly pretty staggering.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. This is Financial Survival Network. I'm your host, Kerry Lutz. We are delighted to be getting a sponsor update on FPX nickel directly from CEO Martin Turenne. And Martin, it's great to have you back. You had a lot of news recently. We've been trying to catch up with you. First and foremost, the pilot plant at Baptiste. We last talked about it. It was really just getting under full swing. You got some results. If I could just summarize, they exceeded your expectations, your recoveries. The base head metal is somewhere at 85 to 88%, and perhaps going higher. Very impressive.
Yeah, thanks, Kerry. Good to talk to you again. And yeah, we're super happy with the results of that pilot plant. For those who are maybe not specialists, the pilot plant really entails putting through a much larger volume of mineralization and much larger tonnage of material than what is typical at a lab scale. Lab scales oftentimes the metallurgical test work are under very kind of control, idealized conditions. And as you scale up to that pilot scale, you start to approximate more closely what a commercial operation would look like. And what we found is as we scaled up from the lab scale to that pilot scale, that not only did we confirm the process flow sheet, but we're actually seeing the opportunity for higher recoveries than what we had previously assumed. So if you had told me sort of a year ago when we embarked on this process that would be the outcome, I would have been ecstatic. And we certainly are very happy with those results for sure.
Right. So the results were higher than what you estimated in your preliminary economic study assessment. And I guess that was a nice surprise on the upside.
Yeah, it is. I mean, just, every percentage point of recovery here is extremely meaningful. You add a 1% point of additional recovery, you can increase the project value or the NPV of the project by, in the order of around $100 million or so. So every single time you're able to squeeze just a little bit more nickel out of the host rock, that really is flowing to the bottom line in a very meaningful way. And so absolutely fantastic outcome for us for sure.
Yeah, I think it's important for you to realize that this project in BC and Canada is producing a different type of nickel, and refining that nickel down to a concentrate hasn't been done before. This isn't your father's nickel mine, as they would say, or your grandfather's. This is a whole new beast here, isn't it, Martin?
It is, yeah. So traditionally, nickel mining historically has always been either sulfide mining from places like Russia and Canada, or laterite mining from places like Brazil, Indonesia, the Philippines. The style of mineralization that we have here is somewhat different, and I think we're the first company to have discovered a deposit where the nickel is in this particular form. It's in a nickel iron alloy mineral called awarenite. And I think the market has generally, been cautious about how they view this deposit and how well it would perform in terms of a metallurgical recovery. We often say that the mining industry is all about the race to be second. It's never about the race to be first. So, we have the challenge here of being the first to develop a deposit like this. And that really speaks to the higher standard that we hold ourselves to in terms of the test work that we do. So this pilot scale demonstration of the flow sheet of the metallurgical recovery of the mineral is really more something that you would see at a much later stage project, more like a feasibility stage project for a typical mining project. We're doing it at the pre-feasibility stage, so we're doing it earlier, and we think we've significantly now de-risked that flow sheet. And what is maybe has been historically perceived as a project risk, we're now very comfortable to say that it's actually a distinct advantage. At the end of the day, you can actually recover this type of nickel mineral from the host rock in a simpler fashion than you can with the other historical methods of nickel mining and extraction. So we go from playing sort of defense to have to defend this type of mineralization to actually now being in a position to play offense, to say, here are the numbers. We can actually recover this mineral at a very high rate using a very low cost process. So it's actually disruptive and we think a huge advantage from a cost standpoint.
And when we first talked, one of the major benefits of this method is that once you provide your concentrate, no smelting is required, which makes it extremely clean, green, and environmentally conscious. And you would think that the market, upon hearing this, you've built a better mousetrap, and a similar plant is out there already operating. The reaction's a bit muted.
It is a bit muted. Yeah. The junior mining industry is interesting. There's very much a focus on drill intercepts and on the whole concept that grade is king, right? And there's a certain degree of truth to that for sure. The higher the grade is likely going to lead to the better the economics, or the higher the margin. But really, our view is always that margin is king. And margin is a function of grade, but it's also a function of metallurgical performance and of the type and quality of the product that you're producing and what you can sell it for to end consumers. And it's really requires a bit more of a nuanced view of FPX to really fully understand that value. The grade of our deposit is relatively low, but our recoveries are very high. And the quality of the product that we produce, as you said, is very clean and very high. And so you really have to kind of put your thinking cap on and look beyond just the head grade of the mineralization to realize that at the end of the day, this may be a relatively low grade deposit, but the margins are going to be very high from production here. That's what's critically important. The market doesn't often sort of put all those things together, I think. And when you put out a metallurgy news release that runs to 7 or 8 pages, it's fairly technical in its nature. A lot of people honestly just kind of get lost in that. I mean, to me, the main takeaway is that we've demonstrated at a very large scale that these are solid recoveries, highly economic. But it's not often that you see companies move positively on the basis of metallurgy, because I think that's generally viewed as sort of boring stuff by the market, and which I think is sort of an oversimplification and overlooks the very real significance of positive metallurgy on project economics.
Right. And this plant is pretty substantial, processing 3.5 tons of material per day, I saw. And you've gone through a lot of material. So really looking at it and not knowing anything about metallurgy, but knowing about economics, you scale up a plant like this 3, 4, or 5 times larger, and it's going to produce huge amounts of concentrate.
Yeah, I mean, the scale here is significant for what you would typically find at a study stage, and we're very comfortable that we're getting close to approximating what those commercial operating conditions would be. And the interesting thing is that I think as we continue to scale that up, what we see is that the recoveries are better than what can be achieved at the laboratory scale, and that's owing to certain grinding characteristics and preferential reloading of material that can only be observed in a pilot scale and not at the lab scale. Without getting too far down the technical rabbit hole with it, we see that as this project continues to scale up in its test work towards that ultimate commercial setting, that some of those characteristics of this ore will actually demonstrate higher recoveries as you move up the scale, which is a great sort of observation for sure.
For sure. So I saw a mention of a PFS in the works.
Yep. So we recently announced the kickoff of a preliminary feasibility study. We've spent most of the last 2 years on a variety of project trade-off studies, looking at various alternatives around the scale and many different other dimensions of the project. We put out an updated mineral resource estimate last year. So all of that work that we've done over the last 2 years really sets the stage for us to now execute on the PFS. We already have a good sense, let's say, of what the economics of that will look like, and we're very excited to be able to execute the completion of that work. And we'll be done that by about September of this year. And our mindset is that this is a major company scale asset. And we very much take a major company type mindset to de-risking into project advancement, because we know ultimately it's going to sit in the hands of a much larger company than ours. And so having that fairly sober approach to project de-risking is a critical thing for us in our management group.
And I know that as a result, the Van project kind of taken a bit of a back seat here. You did some drilling, you made a major discovery. We know that it could even exceed by a substantial margin the Baptiste project. But it kind of, all that good news just has to wait, I guess, at this point.
Yeah, so the company's economic underpinnings historically have been on the Baptiste deposit, which is one of the world's largest undeveloped nickel deposits, and that's going to underpin the preliminary feasibility study that we're working on. 2 summers ago in 2021, we made a major new discovery at the Van target. It's located about 4 miles away from Baptiste, so very much in the same area. We did step out drilling in 2022, and we materially expanded the footprint of mineralization there at Van. What we have now is the makings of another sort of Baptiste lookalike, another extremely large scale nickel deposit. And ultimately, we think that, the nickel endowment within our project boundary could support, 100 years or more of mining. And so ultimately, we think these discoveries will, in the fullness of time, they'll be proven out to be the most important nickel discovery in Canada since the Voisey's Bay discovery in the 1990s. Despite that, again, relatively muted reaction to that discovery and the continued step out success we've had at Van. But we know in our engagement with large, diversified mining companies, they certainly see that scale potential and the regional exploration potential. And that's certainly something that attracts them very much to our project.
And just going back to the pilot plant, there's a similar plant process taking place in Finland, I believe, and it's proven successful.
Yeah, so this is for the production of battery-grade nickel sulfate. So this is where you go from an intermediate nickel product, like a nickel concentrate, for example, and then you have to further upgrade it to a battery-grade chemical product called nickel sulfate. The nickel concentrate that we produce and have produced out of this pilot plant is an ideal feedstock to the production of nickel sulfate. We have ongoing test work to continue to demonstrate that, and we'll have news on that in the coming months where we'll be able to demonstrate and I'll be able to sort of show you a vial of nickel sulfate that we produced from our deposit. That process of going from concentrate to sulfate is very similar to one that's already in place in Finland at an operation called Terrafame, where they use a nickel MSP product as their feedstock into producing sulfate. And that process from MSP to sulfate is very similar to our process for concentrate to sulfate. And so it shows a very strong precedent, one that has relatively low capital costs, relatively low operating costs. And at the end of the day, I think what our test work and what our preliminary feasibility study will show is that what FPX can produce is going to be one of the lowest cost and one of the lowest carbon sources of nickel sulfate anywhere in the world.
And that brings us back again to margins. So your margins are going to be outsized compared to traditional nickel producers.
Yeah, certainly the economic study that we did in 2020, the preliminary economic assessment showed that operating costs in that study were estimated to be just under $3 US a pound per pound of nickel. The nickel price today is around $13 a pound. And we will produce something in the region of 100 million pounds of nickel per annum. So you can quite quickly see the math there is leading to something in the region of $1 billion USD of EBITDA per year, and then a mine life of 35 years. So the economics associated with nickel production here on that very high margin basis are frankly pretty staggering.
Right. So really the lesson is that grade is, well, important, like you said before, is not everything. How much it costs to produce the final product really needs to figure into the economics. And speaking of which, since we last spoke, you got a $12 million injection from a corporate strategic investor who I know you can't tell me who it is. Can give us some kind of hint? Are they in the Western Hemisphere, Northern Hemisphere?
Yeah, I mean, what I can say, and again, we're constrained by in terms of our agreement with that counterparty, and not currently able to disclose their identity, though that may change at some point here in 2023. So stay tuned in that regard. What I can say is that, that process of partnering and of getting that strategic investor really came as a result of a lot of due diligence reviews with a variety of different types of counterparties. There are a lot of large mining companies that are interested in nickel, but then there are also a lot of companies that are downstream of us in the EV battery supply chain, chemical companies, battery companies, and the car companies themselves. And there's not a week that goes by that we don't have update meetings and engagement with one or more company in those various industrial categories. And what I can say is that if this is a very large company that has made this investment, it is a significant validation of the project economics and technical basis. And we're very excited to be able to announce the identity of that counterparty potentially here at some point in 2023. Excuse me. And when we're able to do so, I think shareholders will be very, very happy. To me, what's interesting right now is that shareholder came in and paid about a 27% premium to our share price at the time to buy into the company. That was at 50 cents Canadian. Company today is trading at around 42 cents Canadian. So to me, there's a fairly obvious opportunity for investors to look at the stock and potentially, look at making an investment here at a level significantly below where this very large company made their investment.
Right. Well, that sounds fascinating. And I guess it's part of a trend. We saw GM invested substantial funds into Lithium America recently, and that's just one of a host of ultimate end users of EV batteries who are chasing the globe for resources.
Yeah, that's right. I mean, that's not the first time we've seen upstream investment by a major car company into a battery metals project. It has started to happen with some other companies like Stellantis and Ford as well. That wasn't the first, and it certainly will not be the last announcement of that kind. You're going to see significant amount of capital flowing upstream from the car makers and from the battery companies. I always say that this transition to electric vehicles will be won and lost among the car companies on the basis of which of them can secure access to raw materials. If you're a car company and you cannot secure access to raw materials, you can't make batteries. And if you can't make batteries, you can't make cars. It's as simple as that. So it's existential for those companies to secure raw materials. That's going to lead to massive, massive upstream investment from those companies into mining companies that are developing the next generation of projects, and particularly those that are developing them in North America like we are.
And that comes in with the IRA, right? The so-called Inflation Reduction Act, which provides Canadian companies as well as U.S. companies incentives, tax incentives, and subsidies to get the production rolling in North America.
Yeah, I mean, the IRA does a bunch of different things around effectively compelling North American car makers to use North American sourced raw materials for the batteries. There's not much in the way of lithium, nickel, graphite, cobalt mined in Canada and the United States. So the scramble is on to increase the supply of those materials from Canada and America. And beyond that, there's funding opportunities from both the Department of Defense and the Department of Energy that is actually providing capital to the development and ultimately the construction of projects in Canada and the United States that would provide these raw materials. So sources of capital for companies like ours expand greatly in that world, where not only can we potentially count on investment from car makers and battery companies and the like, but we can also look at potential funding from both the United States federal government and the Canadian federal government, who are actively looking to deploy capital to build out these supply chains. So again, we would hope to have news as a company in that regard in terms of government support here going forward as well. So watch this space.
Right. And I saw basically that Tesla is building a battery plant, lithium processing plant, I think in Nevada. It's going to cost $3.5 billion. And basically they get a subsidy per gigawatt produced there that will pretty much pay for the plant. And they get the plant for free and the batteries for free. So there's some real incentives here to really spur production. And even saw where Tesla brought battery production back to the U.S., where they were going to go full scale in Germany in the Berlin plant. They brought it back to Austin. So it's definitely having an effect. And of course, no discussion of FPX would be complete without a discussion of the nickel price, I guess the copper price, and where all that's heading, how good it is now.
Yeah, we're seeing really strong pricing for nickel for sure. We always looked at copper as a bit of the bellwether of the base metals. Very strong copper pricing so far this year. Obviously, the reopening of China is driving a lot of that. You've had China sort of half shut down now for what seems like years, given the zero COVID policy. Now that you've seen a change in that, I think a lot of people are foreseeing that there's going to be very robust demand coming from China. The fact is that we've seen, still not seen significant investment in the construction of new, nickel operations. Certainly outside of Indonesia, you've seen almost nothing invested in new nickel operations over the last decade. And so that lends itself to, I think, a very, positive view on looming significant deficits in nickel supply. And that should be very supportive of the nickel price for quite some time to come.
Yeah, well, we have these cycles in metals, particularly base metals, of underinvestment, and they'll just go to other parts of the world, lower hanging fruit, less capex, less regulations. But now it looks like the cycle's turning, and I guess FPX could be a direct beneficiary of that, with a stock price at 42 cents, with the news coming down. And once the PFS is released, do you think investors are going to get it at that point?
Yeah, I think that, one thing that we've often sort of lacked with this story, frankly, is that validation or that endorsement from a large, strategic investor that's sort of well known in the marketplace. Now, we actually have that investment now in hand. We've got that money in the bank, but because we haven't identified the nature or the exact identity of the counterparty, the market is still kind of wondering, well, who is this? Is this a real group? I can tell you it's a very real group, a very large international company. And one day when it does come to light, people will be very happy to see that. It will be proven as the ultimate, as a very significant validation of the company, of the technical basis of the project. And, I think investors would be well advised to look at the company and consider an investment here ahead of that news coming out going forward.
As far as the company's treasury goes, you got that injection. I assume there's a burn rate that's higher than it was previously. How's the company financially positioned now, Martin?
Yeah, we've got about $18 million in the bank. So we're fully funded really well out into at least the middle of 2024. So we're fully funded to execute on the PFS. We'll continue to do all the environmental and cultural baseline studies that would ultimately feed into permitting activities. So we're in a great place. No need to raise money anytime soon.
Well, for a CEO of a junior mining company, not having to raise money is a real relief and takes the pressure off, huh?
Yeah, it does. And it just really allows us to continue to focus on advancing the project. Again, major company mindset and major company type work programs associated with advancing and de-risking the asset. Now that we've got a bit of money in the bank, it allows us to really execute on that approach.
Yeah, well, it seems like a no-brainer to me. You want to go over to the company's website, fpxnickel.com, sign up for notifications. So one day when that strategic investor's name gets released, you'll be one of the first to get it. Of course, the ticker symbols in Canada, FPX, in the US, FPOCF. And Martin, been a pleasure. We'll talk to you again real soon.
Thanks a lot, Kerry.
The Financial Survival Network.